Nigerian Exchange Group NGX lifts suspension placed on trading in the shares of a leasing company. Haitham Al-Gais takes office as OPEC Secretary General, just as oil prices slip ahead of OPEC Plus meeting. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Musa Abubakar. Pension regulators are partnering Department of State Security, the Economic and Financial Crimes Commission, the Independent Corrupt Practices and Other Related Offences Commission (ICPC), the Office of the Accountant General of the Federation, Public Complaints Commission, and the Nigerian Union of Pensioners to tackle complaints of extortion by fraudsters requesting payment from pensioners to quicken computation and payment of outstanding liabilities.
Don't listen to anybody who is telling you bring so and so amount of money and your pension would be processed or your arrears will be paid. So we feel that the first step is for our pensioners not to succumb. We are always there. We have our communication channels. They have access to PTAD. We have a call center. You can reach us by email.
Well, fuel subsidy removal and minimizing cost of governance are some of the inputs government must consider in achieving the projected GDP growth in the 2022-2025 planned strategies. These are some of the suggestions made by economists at the conference in Abuja. Nigerians have continued to have their say on addressing the challenges affecting the economy. At this conference, achieving the target of the 2022-2025 medium-term expenditure framework is high on the agenda, and chartered economists are particular about exploring alternative sources of revenue, developing local manufacturing, and entrenching fiscal discipline as some of the solutions needed to strengthen the Nigerian economy.
Technically, the major problem in Nigeria increasing debt is revenue shortage. The country, though endowed with vast resources and potential, still struggles with weak revenue base.
People with skill, people with professionals. We need the economists proper to guide the government.
I said we should get the best of our brains to be presenting papers to the National Assembly for policy making.
The forum called for deployment of the needed economic know-how and technology to turn ideas into action that can turn the fortunes of the country. Now, Haitham Al-Gais of Kuwait today took office as Secretary General of the Organization of the Petroleum Exporting Countries, OPEC, at the organization's secretariat in Vienna, Austria. Al-Gais was appointed by acclamation for a 3-year term at the special meeting of the OPEC conference held on 3rd January 2022. He succeeds the late Secretary General of OPEC, Mohammed Sanusi Barkindo. Al-Gais promised to work with all member countries and partners around the world to ensure a sustainable and inclusive energy future which leaves no one behind. Al-Gais is a respected oil technocrat and well-known OPEC figure who brings a great wealth of experience from both his diplomatic background as well as his extensive experience in the energy and oil sectors in both OPEC founder-member Kuwait and internationally. He was the first chairman of the DOG's Joint Technical Committee following the inception of the historic framework in December 2016. He also played a key role in drafting and developing the landmark Charter of Cooperation. Now let's look at energy. Oil prices drop early on Monday as investors brace for this week's meeting of officials from OPEC and other top producers on supply adjustments. Brent crude futures dropped 63 cents to $103.34 a barrel. U.S. West Texas Intermediate crude was at $97.87 a barrel, down 75 cents after hitting a session low of $97.55 when trading commenced in Asia. Both contracts rebounded more than $2 a barrel on Friday as risk appetite improved among investors. Let's now see prices of other commodities on the global commodities market. Well, to our discussion segment, over the last few days, Nigerian newswire have been dominated by the Naira's capitulation to the US dollar at the parallel market. Based on pro-share channel checks, the Naira fell 8% to a record low of 720 Naira per dollar between last Friday and Wednesday, before recovering some lost ground yesterday to close at 715 Naira. The sharp decline of the Naira in the parallel market brings its year-to-date return to roughly 20 or minus 20%. In contrast, the Naira exchange rate on the NAFEX window, which is the government's official window, was relatively stable over the week, hovering between 427 and 431 Naira. To discuss Naira and the global forceful fall of currencies, I have with me two gentlemen in the studio. Chris Kaka is an economist, and Kingsley Eze is the CEO of Naira Z. You're welcome to Business Express.
Yeah, thanks for having us.
Okay, I believe you've been monitoring the recent event about the decline of most, not just Naira, but when you look at it, currencies by other countries too, to a stronger dollar. So, I don't know, how can you explain this situation? Let's start with Chris Kaka.
Okay, thank you very much. Good afternoon. I think what has really happened also beats imagination, that the dollar itself is actually stable against other currency. But the important thing to realize, and what you could see as the explanation, is the fact that international trade is usually domiciled within, the currency for exchange is always the dollar. Don't ask why, but that has always remained the way it is. And because it is actually the currency for international trade often, even Nigeria here, when we speak of our currency against the dollar, you find that it's actually still being able to stand the test of time compared to other currencies of the world. Mind you, what is going on across the world is, it somewhat appears like a currency war. A silent currency war actually going on. Everybody is trying to see what they can actually do to see how their country can actually maintain the stability of their currency. That much I can give in terms of information of what is going on at the moment in terms of why the dollar is still stable against other currencies of the world. All of them, truth must be told, is being hit by inflation. The US not an exception to it. And so basically what the US has also tried to do, beyond the fact that it has become the currency against which international trade is actually goes on, is the fact that the Federal Reserve is also keeping a watch on it to ensure that look, whatever thing we have to do to keep this currency stable, it actually goes on into it, and that's what you can actually see for now.
Okay, a silent currency war. Kingsley, what do you make of it?
Of course, looking at the whole geopolitical scenario playing, bringing to the fact of the Ukraine-Russia crisis is a huge hit to both the dollar and the ruble. Because if you notice, before, Russia was trading their energy for the dollar. But since the Ukrainian war, they now said for you to buy gas from Russia, you have to pay us in rubles. And this is just a clear case of demand and supply.
Okay.
If I buy...
I'm actually here to come to that.
If I buy energy, which obviously half of Europe needs their cheap energy from Russia. So there's a price war, there's a currency war between the dollar and the ruble because of these geopolitical issues being witnessed due to the effect of the Ukrainian and the Russian invasion of Ukraine. That is number one. The number two key effect is the ripple effect of the COVID-19. Remember the relief funds of almost $1,500 sent to everybody. Almost every world economy had to do a form of paycheck to their citizens to cushion the effect of COVID-19. When you have more money in circulation, it weakens the purchasing power of that particular currency. And why the dollar has this artificial strength at the moment is because of what he just said, because that is the global reserve currency for most international trade. That's why they are still maintaining that position of strength at the moment.
Okay, the Russian solution to this currency decline we are seeing, can it be applied to Nigeria?
Sure, it can be applied to Nigeria in the sense that for the naira to be in a place of strength, you want more people to look for the naira. So you ask yourself, what do I have that is internationally attractive to other countries to seek my currency? The Russia, they have their gas. That's why they are not bankrupt at the moment. Nigeria, we have our oil, we have our agricultural sector, we have the human capital, we have the entertainment sector. So, in a nutshell, we just want to strengthen these key areas, get the refineries working, remove the subsidy. We need to really treat that particular part. This year we are spending 4 trillion naira on subsidy.
And by 2023 we're expecting to spend
probably
like 6 trillion, over 6
So
trillion.
it means that we have a leaking bucket. And there's no way for a bucket to be full when you have like holes around it. So you add water to the bucket by kickstarting these key sectors that depletes our forex, and you reduce the leakages in aspects like manufacturing, free some importation of things that we can produce, and probably the big cat in the bag.
Okay,
removing
Chris,
the subsidy.
Do you agree with that?
With which of it?
The opinion of Kingsley here, that we can use the Russian solution to like steady the naira.
Yeah, and just to add voice to it, what he said, just like what he said, if you watch, people are surprised that the Russian currency, the ruble, is still standing. And what it has done is that, look, if you want to buy my oil, yes, there's been a lot of cuts. Europeans are saying, look, we better begin to have some good reserve of oil now, because we're going to cut the supply. I mean, we're going to cut the demand for oil from Russia. Remember that Russia is the second largest producer of oil in the world after Saudi Arabia. And Russia themselves is also saying, look, if you want to buy my oil, even though you're putting some sanctions on me, you must be my domestic currency. And that way it's pushing it. The other thing is that Russia has been so smart enough to say that, look, for every dividends on bonds and stocks you take out of my country, nobody's allowed to take it out. So you make the money there and spend it within that economy, because the idea is if you make this money, you can actually take it. I said, look, everybody who has any dividend to actually collect on any stock or bonds within that country, I've got to actually be, you cannot move it out of the country. So the repatriation of returns now does not arise for anybody, and that's what they've applied. And like he said, if you can adopt that to Nigeria, you just have to create a need. So here it is now, everybody is scrabbling, I need to buy oil from these guys, and I have to begin to look for their currency to buy, and that puts a lot of pressure on the need for you to begin to access that currency, and that suddenly then makes, so it's like this thing is scarce, and whatever is scarce usually comes expensive, and that's exactly the argument why the ruble is actually found itself still making the lead across the world, because the country have been smart enough to begin to develop some strategies to deal with the sanctions being placed on it by the developed worlds.
Well, don't you think we're having this conversation because Nigeria is more or less import-oriented economy?
Yes and no. We are import dependent. I've always had that rhetoric that Nigeria is a mono economy, will import. It then begins to look as if government is not doing anything.
Because if you look at it, if I want to, virtually almost everything we use is imported. So that's why we're having this, I believe that's why we're having this narrative of, everything should be measured by the number of naira buying the dollar or things like that.
No, you need to remember that at a point in time, Nigeria was also trying to play around with another currency, one of the Asian countries, in China thereabouts. We're saying, look, let's stop dealing with these dollars. Let's see how we can actually deal with the yens to also deal with this particular pressure we're having on us being able, because the dollar became the international currency that everybody is having to deal with. Nigeria attempted it at a point in time, and it worked for them. So you really don't blame them. The challenge we have, why we say we are import dependent, does not mean we do not export. What is happening is that the reserve we have, we're depleting it. We're actually spending more than we're getting. We have a deficit skewed against us in terms of balance of trade. We import more than we export. So we import to get the dollar, but then when we sell out, what we sell out is not enough for us to also recover that particular money we've actually spent. So we have an issue with our reserve, and it's actually depleting. And that is why you see, one of the reasons is that the currency is actually having to drop, because the strength of it, what is backing it, is that particular reserve you have. And if it's not there anymore, you've got issue with your currency. And
CBN is also saying that this rise in demand for dollar is speculative.
Of course. The disparity between accessing dollar at the black market and the government regulated avenues to access the dollar. You have over 200 naira difference. Go to the bank, they tell you 400 to 450. Go to the black market, you have 700. So supply will go to where I can make more money. So the Bureau de Change has, and I like the fact that they are coming together with policies to save the naira, because speculation hurts everybody. I have the dollar and you have the naira. Then you now create artificial scarcity to drive the price up, not backed by the whole macroeconomic characteristics that should make a currency go up. So maybe the real value of the dollar might be 500, but it's trading at 700 just because someone can pay higher. I come today, I need a dollar for 700, I pay. The Bureau de Change operator can say, wow, they can pay 700. Tomorrow, I'll make it 750. And that increases the cost.
Let me add to what he has said.
Okay.
Why that? If just like he said, there's been a lot of racketeering going in currency. People collect at the official rate. I sit there in the comfort of my home if I have access. I collect at the official rate. I go to the black market and I begin to sell it off and make huge money out of it. Is that we need to converge the two exchange rates, both the parallel market and the official exchange rate. And central bank attempted it at the point in time when it's registered almost 5,500 BTC and said, okay, weekly I'll be giving you $20,000 to begin to make retail users of foreign exchange. But they pulled the plugs on them last year. And so they have to source for their own forex and had to decide how much they want to sell it.
Okay, thank you very much, Chris Kaka and Kingsley Eze, for coming to share your thoughts on the program.
Thank you. Thanks for having us.
Thank you.
Thank you. Now, moving on, the bulls could not dominate the equities market as it was bearish at the close of Monday's trading. The all-share index closed negative at 49,950.32 basis point, with market capitalization at 26.9 trillion naira. A total of 176 million volume of shares worth 2.2 billion naira exchanged hands in 4,965 deals at the end of the day's transaction. And now let's join Muplan Dakok for the week-ended review for 29th July 2022.
Equities market in Nigeria depreciated by 3.10%, leaving the all-share index at 50,370.25. Market capitalization dropped to 27.163 trillion naira. A total turnover of 1.546 billion shares worth 16.289 billion naira in 23,873 deals were traded last week by investors on the floor of the exchange. The financial services industry led the activity chart with 1.192 billion shares valued at 5.978 billion naira traded in 11,996 deals. The conglomerates industry followed, while the third place was the consumer goods industry. Trading in the top three equities, International Energy Insurance, Transcorp Hotels and Zenith Bank accounted for 798.9 million shares worth 2.6 billion naira in 3,110 deals. 35,532 units of exchange-traded products ETPs valued at 1.715 million naira were traded in the week in 26 deals, while 94,006 units of federal government bonds valued at 100.359 million naira were traded in the week. All other indices finished lower with the exception of the NGX Sovereign Bond Index, which appreciated by 0.08%, while the NGX ASEM and NGX Growth Indices closed flat. 11 equities appreciated in price in the week. 53 equities depreciated in price, while 92 equities remained unchanged.
Our global stock market is next with Ineka Oko.
Hello and welcome to the Global Markets Review. We begin with markets in Asia, where Chinese stocks rose along with most other Asia-Pacific indices to begin the new month. The Shanghai Composite was 0.21% higher to close at 3,259.96. Hong Kong's Hang Seng Index also rose 0.05%, while in Japan, the Nikkei 225 was up by 0.69%. European stocks also ticked higher as corporate earnings continued to deliver upside surprises, while investors assessed remarks from central bankers that higher interest rates are needed to bring inflation under control. The German DAX gained 0.36%, UK FTSE also topped 0.33%, while France's CAC 40 was up by 0.36%. Conversely, U.S. stock futures fell on the first trading day of August, following the market's best month since 2020, as investors look ahead to another week of key earnings reports and economic data. The Dow Jones Industrial Average was down by 51 points. S&P 500 depreciated by 0.27%, while Nasdaq Composite declined 0.28%. Back home, stocks in Africa were marginally positive across board this Monday as investors remain cautious amid rising inflation. South Africa was 0.09% up. Tunisia and Namibia both added 0.05%, and Kenya rose 0.41%. And that's Global Market Review. I am Neka Oko.
Now, this is where we end this episode of the program. Business Express will return tomorrow at 9:30 a.m. Don't forget, you can access all previous episodes on YouTube. I am Musa Abubakar.